In this video, traders, we're going to look at one of the more underrated benefits of using a moving average. Stay tuned. Hey guys, warm welcome to you. Alright, so if you're subscribed to the channel, by the way, I appreciate your support. You've probably seen videos, done a few videos, talked about moving averages, some of the benefits, some of the ways we can use them, maybe some in setup, some crossovers, this kind of stuff. And they're what's traditionally known as, right? Moving average, crossover is a strategy that most people are aware of. You've got a fast moving average, crossing over a slow moving average, using that as a signal to get in or out of the trade. Now, there are other ways of using moving averages, but in this video specifically, I want to talk about one way which I like to use a moving average. So being a price action trader, someone who likes to look at how price is interacting with prior levels, highs, lows, how it's responding to extensions, etc. Moving averages don't play a big role. I've got a specific setup where I use a moving average for it, but apart from that, not a huge role. However, I like to use moving averages in this way, and it is to keep me from chasing a market too much. Now let me explain. So you see a good setup, you've got a target up here, the price is starting to rally on. You want to get on board that, okay, and you're waiting for a pullback. It pauses a little bit, it goes again, and the further it goes, the less I want it, right? Because that's just really what it's all about. Because obviously the risk reward is all of it is shrinking. You've only got so much reward left, and you've got to kind of cap your risk somewhere. And the further you move, okay, multiple pullbacks into the extension, the less likely that extension is to continue, right? And not always the case, but in experience, we know, guys, we have a pulse, pause, second pulse, pause, third. When you start getting 4 and 5 pullbacks, it's stretched. Doesn't say it can't happen, but it's stretched. And so when you're trying to get into the trade, there's a limit to how far you want to kind of still get into it. But there's also, you want to be buying on a dip. And you don't want to be chasing stuff, because you've got this decision, right? If you chase it, that's potentially fine, but you're going to screw up your risk reward ratio, because if you're chasing a market, you are going to have your stop below a reasonable pullback. Otherwise, you're selling into a pullback, which is a great buying opportunity. So your stop has to be kind of twice as wide, which then messes with your risk reward. So your risk reward might only be kind of 2 to 1, 1.5 to 1. When in reality, when you're getting a good entry, it could be 3 to 1, much more palatable, much more likely to work out in the long run. So how do you do it? So when you're in the zone, you'll still want to buy, and it's not gone too far, it's kind of doing the right price action, it's working out well, it's driving up, it's doing all the things you need to do. Have your moving average, and you basically say to yourself, listen, unless it comes back to my moving average, that is going to be probably something like a 20 period. Maybe a 10 if it's really, really steep, 5's too much, 50's too wide, 20 to 10, and I prefer 20 myself. So it's really buying on a kind of dip, but not chasing. And then when you do it, you can almost say to yourself, right, well, it's moved back, let's say 20 ticks. If we're talking from a day trading perspective, I can then buy at the moving average and use the distance between the high and the moving average as my stop level. So you're then using that 20 tick stop or whatever it may be and saying, all right, well, at least if it goes to highs, that's my risk covered. And then I'm looking for maybe further highs, 2 or 3 times that. So it's a really good way, guys. Check it out and try it out. If you find yourself chasing stuff, if you find yourself getting sucked into kind of moves that are kind of feel like they're really going, and just stick a moving average on, say, right, okay, here's my limit. I want to see it coming back to it. It doesn't matter how far it goes, as long as it doesn't go too far, obviously past your point of no buy zone. It doesn't matter. You're just waiting for the pullback. And when you get the pullback, then you're giving yourself much better opportunity of getting in. You're not chasing it. You're not going to be kind of worried it's pulling back. So if you're chasing it highs, it's pulling back and like, oh, bit of pain, and you can't sit through much more. You end up coming out at the wrong point. So it's a really good tool, guys. It's underused, I think, for that. Most people don't use it, and you can literally just then take it off your chart. If you don't want to clutter up your chart with it, I understand that. You can take it off your chart and bring it in when you want to trade in this way. Hey, it's driving on, I want to buy this, wait for it to pull back, hit the moving average, wick below it, bang, I'm in, there's my stop, right, off I go. And it just stops you chasing, especially good, guys, if you feel like you're chasing stuff, if you feel like you're a little bit too eager, you're a little bit kind of jumping the gun a bit, that will just stop you. Yes, you're going to miss some trades, but it's kind of really going to serve you far better than chasing, getting a few lucky ones, because most of the time chasing doesn't serve you. So having that little kind of tool, very easy, just waiting for it to come back to kiss it. Just gives you that extra little edge, a little bit of extra juice, which really skews the risk reward in your favor. All right, guys, that was moving average. Let me know your thoughts on that in the comment section below, and I appreciate your support. If you're a subscriber, if you're not, consider doing so. Hit the notification bell, sharing, all that other good stuff. And I know a lot of you are doing that constantly, and I do appreciate it. All right, guys, take care. See you next one. Bye-bye.